Uh, Good day, dear investors. It's my pleasure to welcome you from Office of Orion Securities here in Vilnius. And today, in this online meeting, we want to present you with an investment opportunity, a fixed income financial instruments, so bonds, which are now being publicly placed by UAB Eternia Solar. So, Lithuania domiciled company, which is a part of a larger Sun Investment Group. So, solar assets, solar energy development group, one of the leaders in our region, having very strong, I would say, position in Polish renewables market. And today with me, representative of Orion, we have Davidas Varabauskas, who is a founder and the main shareholder of Sun Investment Group. So the ultimate group, the daughter company of which is the issuer, Eternia Solar. And during today's webinar, of course, we will go through the slides, and afterwards we will have a Q&A session. So I really urge you to register all the questions using Zoom's Q&A interface, and we will answer them after finishing with the first presentation part. So moving forward with the case, so as mentioned, Eternia Solar is issuing up to 8 million euros of bonds, short-term bonds, and the issuer is a subsidiary company of Sun Investment Group, specializing specifically in the contracting and construction, using a term EPC. So in construction of solar parks. The funds are also linked to this activity. The funds the company is seeking to get through the bonds would be used as a working capital financing to execute a construction contract signed with another project SPV of Sun Investment Group, which is at the moment developing and constructing on 120 megawatts solar park located in Poland. Since, as I mentioned, it is a short-term bond, the goal of this bond is to provide a bridge financing via bridge, because at the moment, the project owner, so SPV owner of 120 megawatt solar park, has already signed agreement with institutional lenders, which specifies that once the construction of the solar parks is advancing and completed, loan amounts would be disbursed, and loans disbursement are for a specific use of proceeds, which is exactly paying contractor, so paying Eternia Solar for provided construction services. However, the Eternia Solar has to invest its own capital into the prepayment of equipment purchases and services, which are going to be erected in the Polish solar park. That's why there is a need to cover that working capital, which has to be invested, and later on, which will come back as revenues from this construction contract. The whole issue is up to 8 million euros. In this first tranche, we are issuing up to 3 million euros. Coupon rate being offered is 10%, paid out semi-annually. Collateral is also linked towards the overall structure of this debt instrument. So the issuer is pledging under first rank pledge all the receivables related to the execution of that specific construction contract for 120 megawatts solar park. In addition to that, dedicated bank accounts of the issuer and daughter company of both companies involved in this construction project the bank accounts are being pledged. And we also have additional covenants stating that the money received from the bond issue will be deposited in these dedicated accounts. Monies can be used only to pay investments, advanced payments, and cover the costs which are related specifically towards this construction contract of 120 megawatt solar power plant. The proceeds revenues from the construction services provided will have to flow back to these dedicated accounts. So ensuring that it is all circle fenced and that money is used specifically for indicated working capital needs. Subscription period is running from this Monday, so 8th of December, and it is running till next Friday. Regarding other parameters of the issue, most of them I have already mentioned. So pledge of receivables, pledge of bank accounts. What is also important to mention is that the group company, so Sun Investment Group, ultimately holding, consolidating both these construction activities and development of solar parks in Poland and in Italy, it is providing a corporate guarantee for the whole bond issue plus all the accrued interest. So it is used as additional credit risk mitigation measure. Special undertakings, most of it I have indicated, so that there is a control of how proceeds can be used. Also, additional covenants linked towards credit risk management. There is a limitation how much of additional debt the company can take. If they take additional debt, the maturity has to be longer than the bonds. Also, an equity ratio, minimum equity ratio of 30% have to be maintained. There is a restriction of dividends and additional lending in order to ensure that, of course, the cash flow generated from these contracts is used firstly to cover the bonds, and only later off it can be diverted to other intentions. And also, we also have a gradual accumulation of funds covenant stating that when we have 3 months remaining till the maturity, at least 15% of the bond amount has to be accumulated in a dedicated bank accounts. When we have 2 months remaining, 50%. When we have 1 month, 75%. And the issuer can choose whether to keep cash on the account or redeem early specified proportion of the issue, which brings me to another point: early redemption. Issuer is provided option to redeem early as soon as after 6 months. If it is redeemed after between 6 and 9 months, 1% premium, early redemption premium, has to be paid out to the investors. If it is redeemed when 3 or less months are remaining, the redemption is without any additional premium. Placement, it is a public placement in all Baltic states, meaning that investors can subscribe as little as 1,000 euros and can do it through any bank or brokerage company operating in any of the 3 Baltic states. Finally, listing, the bonds will be listed in the nearest future after the closing of the books, so most likely beginning of January will be listed in First North Alternative Stock Exchange. More about the structure. David will also come back to this slide later on, because I think that's one of the importance in explaining the parameters of the whole issue. So we have an issuer, Eternia Solar, which has a construction services contract signed with SPV, several SPVs owning 120 megawatts solar portfolio in Poland. these SPVs have already signed financing contract with institutional finance providers, which, as mentioned, states that the funds are disbursed once the construction is advancing. So ultimately, that's why there is a need to obtain a working capital financing for Eternia so that it can combine it with its own funds, use it to order equipment needed, to order services, construction services, and build these solar power plants. Once it's built, institutional investors are disbursing loans, which have a limitation that it can be used specifically to cover the construction costs, meaning to pay Eternia Solar. And from these revenues, the Eternia Solar will redeem the bonds within the next 12 months. Key investment highlights before moving on towards issue and then the group presentation. So first, of course, involvement of institutional investors in this project financing. It is important from two aspects. First, of course, is that we have completed extensive due diligence, technical, legal, financial, and approved that they will provide the debt financing for this solar park. One of the requirements is, of course, off-taking. So 71% of portfolio revenues is guaranteed with either state support scheme in Poland or power purchase agreements. Another requirement is 15% equity participation by Sun Investment Group, which is already completed and invested. And also, from another point, of course, we are providing a source of redemption because, as mentioned, we are financing construction works with this bond issue. Once the solar power plant owners pay back using institutional money, this inflow is used to redeem the bonds. Polish renewable sector, it is a bit different from the Baltics. The prices in general are a bit higher, and demand structure is not, and supply structure is more diversified than in the Baltics. And finally, of course, the issuer is a part of a larger Sun Investment Group, which has extensive experience in developing from the greenfield stage, bringing the projects to ready-to-build stage, and then finally executing construction, connection, and finally even selling the project. So closed experience in the whole area of solar project development. And finally, yes, a bridge structure, well-defined and clear source of repayment using already approved institutional investors' funds. So now I'm giving floor to Davidas to continue with issuer and group presentation.
Hi, everyone. So a few words about Eternia Solar. So Eternia Solar is a reputable and trusted EPC company in Lithuania and in Poland with roughly 10 years of experience. Through its history, Eternia installed well above 200 megawatts of total capacity of photovoltaic plants. It has a team of 40 experienced experts, and those 200 plus megawatts have been spread across more than 300 projects, varying in size, between 100 kilowatts and 10 megawatts on the higher end. So currently, Eternia is already engaged in planning and execution of construction of roughly 270 megawatts that are owned by Sun Investment Group. Those projects are in different stages of planning execution. So part of them are already under construction, part of them are in engineering and preparation for procurement, etc., etc. Maybe let's pass the slide. Yes, so Eternia does all the main parts of an EPC company in-house. So we are doing engineering, procurement of the equipment, part of the permitting, depending on the market. In Lithuania, it does full permitting. In Poland, it works in tandem with some investment development team in regards to the permitting of the projects that we build. Then obviously construction management. We have project managers in-house, site managers, designers, and the overall direction of construction in-house. And then once the project is completed, the construction is completed, Eternia stays as an O&M, a technical O&M provider for indefinite future of the project. Here are the approximate locations of the projects that Eternia has already built in Poland. So it is 133 already commissioned and operational plants, plus another 29 that are currently in well-advanced stage of construction that are not included in this number yet. So here you can see that the dominating power of the built power plant is 1 megawatt. This is due to early, let's say, setup of the Polish PV market, which was driven by CFD auction scheme for projects up to 1 megawatt. So obviously the first boom was at projects of 1 megawatt. We are now shifting from that into bigger projects, with the biggest one of 150 megawatts in our pipeline, which is going to start construction early next year as well. So here, this is the track record, let's say, with some of the more better known industrial names here in Lithuania. So we built a power plant for Ignitis, for EIKA, for Retal, which is a plastics processing company. We built one of the biggest rooftop installations in the Baltics, by the way, so 1.4 megawatts. Not the biggest anymore, but one of the biggest. And a few other names that are known here in Lithuania. So this is the management team and a little bit the split of the personnel per type of positions that are held. As you can see, we have multinationality team. So we have head of an EPC based in Madrid, where we have one of the key offices for Sun Investment Group. Then we have Marius, who is a country manager here in Lithuania, but also head of project management on a group level. Then we have Wojciech, who is a country manager for Poland overall, for Sun Investment and for Eternia. And we have Lila, who is based in Greece, and she is heading our O&M operations for the group. Yeah, so as Mykantas has mentioned, and as it is probably clear, so Eternia is part of a larger Sun Investment Group as a whole. Sun Investment Group, well, we share a few numbers with Eternia that we have more than 200 megawatts executed, and part of all of them pretty much sold to investors or end users. We have a pipeline of around 3 gigawatts of PV projects and battery projects, for that matter, spread across 2 key geographies, so Poland and Italy, Poland being the dominating one as of today. We have around 70 people in total working in EPC, development, and general services in the group. So here are like historical milestones of Sun Investment Group. So we started operations in 2017 in UK. We quickly moved into Poland, did a few very successful transactions. So 43 megawatts that have been developed, built, sold to Aberdeen Standard Investments. Then another 66 megawatts that we sold to Lords Asset Management, one of the funds that they manage. In the course, we have set up our own greenfield team, and we started developing projects on our own instead of just buying them at ready to build from local developers. We did the same in Italy, set up the same operation. Then in 2021, we already accumulated enough equity capital to start doing investments and full cycle by ourselves. So we acquired 24 megawatts of ready-to-build projects from the market. We built them, financed the construction, and sold the project to a private, actually a public IPP company. From that moment on, we did not sell any projects since 2022, and we focused on developing our pipeline, which has now reached a significant number of roughly 450 megawatts that have either all the permits being ready to build or the key permit, which is basically the right to connect to the grid in Poland, which is one of the last things that you get in the permitting phase. Yes, maybe a few mentions. Yes, so we have closed financing facilities with multiple international lenders. So we did multiple facilities with Eiffel debt fund. Then we have Amiral. Then we have Cordian. Then we have Berenberg, a German lender. We are finalizing with NordLB. So it seems that we have a trust of reputable lenders in the infrastructure financing sphere. And first of all, we are happy about that. And on the other hand, we think that it provides a certain stamp of proof of the quality of work and processes and value that we have created at SIG. Yeah, so here it is to state the obvious. So the group does it all. So we originate projects from greenfield stage. Basically, we identify land plots, get all the permits done ourselves. Then once the projects reach ready to build stage, they pass to Eternia for construction. Sun Investments works on securing financing for construction and long term. And once the projects are built, so Eternia stays as an O&M provider, technical O&M provider, and Sun Investment Group does the asset management side.
And maybe it's also indicated that shift towards building your own and owning even the projects. Maybe you could comment on that. How do you see that in the future?
Yeah, so initially, obviously, we had to build up capital. And so we were selling everything that we had developed, but we never exited up until operational project phase. So we stayed with the project till the very end to capture the whole value chain. And lately, so in 2025, mostly we have come to a conclusion that the best long-term strategy for us is to build as much megawatts as possible on our own balance sheet and operate those assets long-term. Provided that there is extensive and favorable financing, long-term financing, as well as construction financing available in the market. We have enough projects as a collateral to be able to fund this expansion of at least our own projects, and maybe later on to expand by some acquisitions. But yes, we identified this business model as something that is going to create really long-term value for the owners of SIG and investors of SIG. Yeah, so Sun Investment Group is the main company. Sun Investment Group UAB, I mean the Lithuanian entity, under which all the other businesses and assets are located, owned by it. Yeah, so we have Eternia Solar UAB, which is like the holding company of the whole Eternia activities. Under it, we have Eternia Solar PL, which is doing the Polish construction side. We have Eternia Solar LD, which is building projects in Lithuania for third parties mostly. We also have Eternia Solar Development Deutschland, but it is a dormant company rather. Then obviously we have all the project SPVs owned by Sun Investment Group, not directly, but through intermediary holdcos that we have set up in multiple jurisdictions, depending on the case. And same goes for Italian projects, which are spread across multiple SPVs owned by several holdcos. Yeah, so on top of Sun Investment Group UAB, we have at the end of it, we have two individuals, which is myself and Andrius Terskovas. Then we have two Luxembourg entities in between. And then they own Sun Investment Group UAB 100%, and under which we already consolidate all the group activity. Yeah, so here we have a core management team. Well, part of it, you saw another part already in Eternia. So you have myself. Again, we are seeing an international crowd here. So we have Enrique, also working from Madrid office, COO of the group. We have Iona heading our legal department. She is located in Vilnius. And then we have Adriana, who is our CFO currently, and she is in Luxembourg. Yeah, so here we are looking into our Polish assets from Sun Investment Group perspective, but obviously that goes into this specific opportunity of 120 megawatts. So as you see, we have more than 300 megawatts that are fully permitted, and part of them is already in construction. So those 120 megawatts are part of these 300 and what do we have here, 30 or 40. And plus we have another 120 megawatts that secured grid connection, actually in 2025. So these are new additions from our pipeline. And then we have like 1.7 gigawatts of earlier stage projects. Well, earlier means that, as you see, 1.3 gigawatts have all the permits except for grid connection. So we are working on securing grid connection. And we are expecting several hundred megawatts more to come in 2026 from this pipeline. To get grid connection and eventually be built and become operational plants. So the group has already invested 13 million euros of equity capital into the construction of these 120 megawatt projects, which are actually roughly 80 individual projects spread across multiple SPVs. This capital injection was a requirement of senior lenders. We have fulfilled that requirement, so this is already completed, and all the remaining amounts as per EPC contract signed by SPVs and Eternia Solar are going to be provided by senior lenders of the SPVs. Yeah, so key parameters of the portfolio. So obviously projects are located in Poland, 120 megawatts spread across 13 SPVs. Projects ranging from 1 to 30 megawatts in size individually, roughly 80 projects in total. All the projects, as mentioned, have all the necessary permits, so we are fully ready to build and in construction mostly. Looking from the SPV point of view, which is not very relevant for Eternia bond emission, but still important to know. All of the 120 megawatts have participated in the Polish auction for contracts for different scheme and have been awarded part of their energy through that scheme. Why part? Not all, because this is basically the strategy in Poland for quite a few years already. Prices are indexed annually, so we push our deliveries towards the second half of this 15-year support period. The more immediate energy deliveries are commercialized through commercial PPAs in Poland. So dominating term is 5 years. Apart from that, you can go with direct consumer with 10 or more years, but we chose the previously mentioned option, at least for this project. So, as mentioned, we have gone from develop, build, and sell into the develop, build, and own model with an option to sell if there is a need, if there are very favorable conditions in the market, or both. And yes, so as mentioned here, we are planning to keep all these projects on the books. So we have 11 million euro of revenue with 9 million euro of EBITDA on these projects. So we have an EPC contract signed at an average price of 570,000 euros per megawatt between the SPVs and Eternia Solar. So obviously this price has a EPC margin locked in already for Eternia, which is actually going to be the source of repayment of this bond emission. This is a map of projects included in this 120 megawatt basket. The map is split in two, divided by the lender. So we have one for Amiral, another one for Berenberg/NordLB. Yeah, the setup, as explained by Mykantas, I think it is pretty obvious by now how this works. So we have construction financing or midterm financing on the SPV level provided by mentioned lenders. And we have an EPC contract between those SPVs and Eternia Solar, where payments are done according to delivered milestones. And Eternia Solar is raising this additional working capital to be able to execute those contracts without delays and in a ASAP mode, basically. So that because Eternia needs to pre-fund the construction from its own sources in let's say in the most optimum scenario. So the equipment is ordered not individually for each project, but rather in batches or in full. So obviously you are advancing more money, which later you recover through milestone invoices to SPVs, which have already fully guaranteed financing. Yeah, so here we have our current lenders involved with this portfolio. So we have Amiral that has provided us a revolving 16 million euro facility. We are building first 29 or 28 megawatts from this facility, which we are then refinancing into long-term facility that maybe I will be able to mention later on. And then from that money, we are recycling that into building additional 30 megawatts. So roughly 60 megawatts are going to be built using Amiral funds. Then we have the more than more than 40 million euros provided by Berenberg. It is a multi-purpose facility, so it's used as a DevEx refinancing facility, and as well as it can also be used for construction purposes. So we are drawing down on that facility, but in the meanwhile, we are finalizing the closing of pure construction financing facility with NordLB. We have a signed term sheet, due diligence completed. We are finalizing the financial agreement, and hopefully we will close this in the few following days.
Yeah, thank you, Deividas. I'll switch with review of the financials of the issuer and of the group, which, as mentioned, is also a guarantee provider for this bond. So when looking at the numbers of the Eternia Solar, of course, it's important to understand that it is really deeply integrated in the operations of other group companies. Namely, it is mostly providing these EPC services to project SPVs owned by Sun Investment Group. And as you can see in the comments on the right, majority of revenues are actually related to EPC work done for internal companies. Nevertheless, around 25% of revenue in the year 2024 were generated from external sales to external clients. In Lithuania, for example, the number of which is not included because this is a standalone account of the issuer. In Lithuania, where subsidiary Eternia Solar LT is operating, from these EPC services to outside clients, around 13 million were generated in 2023 and around 6 million in 2024. Moving on to the balance sheet. So again, most of the construction work is done for the internal group orders. It is reflected in the balance sheet. In financial assets, we have 10 million. These are the shares of Polish subsidiary, which is also involved in the construction of Polish projects, and specifically this 120 megawatt project, which is being financed. 30 million euros as non-current assets. These are receivables for completed construction works receivable from our group companies. Regarding liabilities, it's also important to know that they consist only from related parties, so group-related payables, and all these payables are subordinated for the benefit of bond investors. Moving on to consolidated group numbers. These are consolidated, so the revenues shown represent third-party revenues, so from operations with outside clients. David has mentioned that the group as a whole, majority of activities are related towards development of solar projects, and development as such is rather cyclical activity, meaning that for several years you are investing first in this development of documents with a goal to achieve ready-to-build stage. Later on, you are investing in construction capex. So, and for the recent years, since the strategy was focused more towards development of portfolio, we do not have very significant project sales. But nevertheless, revenue, which was around 10 million in the year 2024, it was mainly generated from construction activities, construction services provided for outside clients, which is of course important because it brings liquidity and cash needed to finance continuous operations of the group while developing and waiting for a launch of these investment projects. Assets of the group. So majority is in non-current assets, and it is related towards portfolio under development. The numbers here are estimated, stated, and arrived on the cost basis. So we have 32 millions under property, plant of equipment, which includes projects in advanced stage where construction was started or projects which are already completed. So at cost, the value of such projects is around 32 million euros in the middle of 2025. Intangible assets, 46 million. These are greener, not that developed stage projects. So basically, these paper development phase, greenfield, where the goal is to achieve ready to build, get all the permits and move on with construction. So value of such projects on a cost basis is around 47 million euros. Of course, it does not reflect the market valuation. If then sold, completed projects, of course, are sold with a significant markup compared to the cost of creation. Other side of the balance sheet. So we have a total equity consolidated on consolidated level of 15.6 million euros. So equity ratio of around 15%. Payables, which are around 70 million euros. Well, most and significant majority of it is related and located on a project level. So this is to finance the development or construction of separate projects. So the loans are taken on a project SPVs or sub-holdings. Majority of it is long-term, and as of middle of 2025, 3.2 million was payable within 1 year time. And we also see a bond issue. Sun Investment Group has issued bonds 1 year ago. So it is I would say the most significant liability on a holding level, not on a project level. Coming back towards bonds, as always, we urge all investors to familiarize and go through all the risk factors which are related to investment in these bonds. On this slide, we have only a summary. Full description of risk factors is available on the descriptive document, information document. So I really ask everyone to familiarize yourself. Just maybe pinpointing what are the main sources of risk. So the Eternia as an issuer is construction company. So of course it bears part of construction-related risks. Of course, if compared with, let's say, residential, commercial, real estate projects, construction of solar power plants are really not that complex. So risk is not that significant. Of course, there is a dependency on the cycle, since the client is developer of these projects, and development of power plants is related to significant capital expenditures, which of course is dependent on the price of capital and other factors stemming from the macroeconomic conditions. So of course the issuer is not immune from that. Regarding risks related to the issuer, yes, project development risk. However, when we talk specifically about the bonds, proceeds will be used to finance construction of identified 120 megawatt park. All the permits are obtained, so there is no development risk related to permits or construction or other regulations. I would say that liquidity risk is worth mentioning. The overall activity of the group is development, which, as I said, is kind of cycle intensive business, meaning that you invest for several years and then you exit either through launching operating power plant or a sale. But it's good that the company has EPC activities also provided to outside clients which can cover this intermediate liquidity needs. Moving on to bond-related risks, these are more conventional ones. This investment may not be suitable for all investors. Another one is, of course, related to liquidity. Bonds will be listed, as mentioned, on First North Nasdaq exchange. However, the liquidity is not guaranteed. So if investors want to sell before maturity, the price can fluctuate due to interest rates, inflation, and all the other factors. So investors should keep in mind if deciding to sell in secondary market. How to subscribe? I guess it's becoming a norm that the process is done through Nasdaq stock exchange infrastructure, meaning that investors are able to submit subscription orders through any bank or financial brokerage company operating in the Baltics, so Lithuania, Latvia, and Estonia. We have checked with main names, so subscription is available on the client interface. So you can do it through internet portals of the bank very easily. As mentioned, subscription period is spanning till the 19th of December, so next Friday. It is the final date during which you can submit an order to invest in the bonds. Which brings me to the date, as mentioned, subscription this and next year. Settlement date and issue date is 23rd of December, so just before Christmas. And finally, final redemption, if no early redemption option is used, is after 1 year, so December 2026. And a final slide before Q&A session, coming back to the overall structure. So a total issue amount up to 8 million, first tranche 3 million. In case there is a significant demand over subscription, we have an option to upsize it to total 8 million amount. It is a short-term bond because it is solving a bridge financing need of the issuer. By bridge, again, I will repeat that the client of the issuer, so solar power plant owner, has a secured financing from institutional investors, which will be disbursed once the construction is advancing or completed based on milestones. So to construct it, the issuer has to spend money on ordering equipment, ordering works, which will come back as revenues and will be covered through loans disbursement, which are specifically used to cover the EPC invoices issued by Eternia Solar, and in line money will be used to redeem the bonds. Security receivables stemming from these construction contracts related to 120 megawatts solar projects in Poland. Also a corporate guarantee by the whole group. And we have a special undertakings, as mentioning, limiting how funds can be used, requiring a limitation on dividend payout and additional debt. And finally, a gradual accumulation of cash is also required when we have 3 and less months remaining till the final maturity. And of course, it is applicable if the issuer will not exercise early redemption option, which can be done as early as after 6 months with 1% premium, or remaining 3 or less months without any premium. And finally, yes, the bonds will be listed on Nasdaq First North Vilnius alternative market. So we have covered the slides, and we can switch to Q&A session. Maybe let's start with a general one. What factors made Poland the preferred market for this portfolio, but maybe in general also for SIG activities and strategy, and what competitive advantages does it have compared to the Baltics?
Okay. Well, first of all, it's a much bigger market. So less risks associated with that, specifically for energy offtake. But now, subjective reality of SIG, so we moved into Poland in 2018. We were technically a startup, and we did not have too many resources to choose. So we had an early opportunity there in Poland, which was like the beginning of this Polish PV boom. And it was one of a few promising markets in Europe at that time. We were looking into multiple options, Spain being one of them as well. But right now, there are some hard reasons why we stayed. So first of all, because we were a first mover, so we were able to secure space for ourselves, even without being a big company at that time. But at the same time, Poland has one of the highest energy prices, electricity prices in Europe. So obviously for a producer or a producing asset developer's perspective, that's good news. And on the other hand, so there was very little renewables penetration. So it meant that it was possible to achieve scale. So this is an explanation for Poland, and also this the reason why energy prices are higher in Poland than in Lithuania. We are much more integrated with the Scandinavian energy market. There's much more renewables here. The PV expansion happened overnight, basically. So, in a frame of 2 years, multiple gigawatts have been built for such a small market as Lithuania. Well, that's a lot. And obviously, there was significant price cannibalization here due to that. It was one of the reasons why we already, by choice, decided not to develop PV projects in Lithuania. It doesn't mean that it wouldn't have been profitable, but as we had the choices, so Italy and Poland, we chose to reinforce our activities in Poland and in Italy, and not to venture into Lithuanian PV development. And from today's point of view, I think it was a really good decision for us.
Based on your experience with similar projects, what is the likelihood of construction timelines shifting from the current plan? I guess it's a good question, given that the maturity of bonds is rather short. So 12 months, is it enough?
Yes.
To have a buffer?
Yeah, so we do have a buffer, and we do have one key element to understand here. So the point is that 120 megawatts is spread across 80 individual projects. Most of them are 1 megawatt or slightly more in capacity. Only one of them is a 30 megawatt project, the rest being mostly 1 megawatt projects. It means that the construction timeline is short. The equipment used does not require long production times. We are working in medium voltage here, so these are not high voltage projects where a substation has a significant, let's say, delivery time, as well as commissioning is much more challenging. So with medium voltage projects, all the steps and processes are fairly straightforward and simple, even comparing to Lithuania, for example, which is quite burdensome here to commission a project, comparing to Poland. So there might be some delays. So I would say 2 months is a maximum delay that can happen in a single project. But as we have 80 individual projects, to expect delays in all of them happening all at once, it's probably not really realistic.
Yes. So another question regarding the senior financing. Could you explain more on how will the project be financed and whether it has secured financing already and in what form? So
yes, so all the projects have secured financing. So the SPVs have signed loan agreements for construction loan agreements with Amiral, one hand or Berenberg on the other. And right now, another one that is being finalized is NordLB. NordLB is simply going to fund the construction of projects currently covered by Berenberg, which is like a multi-purpose loan instrument or vehicle that we have.
So just maybe to once more summarize, the loan agreement is signed, but the disbursement of cash is linked towards milestones, construction milestones. To achieve these milestones, you have to invest funds into prepayments, ordering equipment. So that's why there is a need for bonds.
Yeah, but it's important to understand the contractor, so Eternia Solar and SPV. So we are raising money now for the contractor to fund its working capital, not for the SPVs. The SPVs already have the funds. The only thing is that they can only pay as per stated milestones, which there are not too many milestones in a contract. I think like 4 milestones or so in every contract. So obviously each milestone covers multiple sub-elements. So the contractor first needs to order equipment, perform certain works, advance payments to subcontractors before it can collect the money from the SPV. So the SPV financing is done. There is no need to do anything with it anymore. Here we are simply resolving the needs of the working capital of Eternia Solar. So the contractor, not the asset owner.
Yes, thank you. Related question, could you elaborate on how the working capital needs were quantified for the project and what portion of the construction budget remains unfunded by institutional lenders during the interim period or also by the bonds maybe?
Yes. So here again, I'm repeating the same. So there is no gap in funding of the capex of the projects from SPV point of view. Equity capital has been invested, meaning that advance payments to the contractor, Eternia Solar, have been done, and all the remaining part of the unpaid amounts according to the signed EPC contracts is covered 100% by the credit loan agreements signed between SPVs and lenders to the SPVs. So Eternia will collect the money for each invoice that it issues for works performed, equipment delivered, etc., as per the contract. Now, Eternia is only short in certain moments on working capital to be able to execute those contracts without delays. So,
yeah, also related question regarding condition precedent. So beyond achieving the required construction stages, are there any additional conditions or compliance precedent that must be met before institutional lenders release funds?
No, not really. So the works that are being delivered are being certified by a technical advisor, and with their certification, the invoices can be paid. On the project side, all the permits have been obtained, all the sponsor requirements have been fulfilled, so all the CPs have been fulfilled. There's nothing else pending, basically. It's just execute works, certify the works, issue invoice, collect the money.
Yeah, we have a further away question about the group activities, not specifically this project. What's the group and this portfolio strategy related to BESS, so battery storage systems?
So specifically in this portfolio, there is no BESS. As a group, we are developing BESS projects as standalone and also looking into options how to hybridize some of the PV projects that we have. So we are in there, but we haven't gotten to construction phase with BESS so far. But for sure, it is going to be part of our energy mix in Poland and in Italy.
Yeah, and also we have a final question. regarding early redemption under current assumption, how likely is that the bonds will be redeemed earlier than maturity, and what would be the main drivers of such decision?
So as of now, so we have built a cash flow model for all this portfolio, and we do not really see. So if things are going according to plan, there will be no early redemption, except for maybe from the ninth month, when we need to start allocating part of the redeemable funds on the reserve account. So we might simply choose to make this partial early redemption.
Okay, so thank you, Davidas. Thank you, all investors, potential investors, for the questions. If you still have any remaining questions, do not hesitate to send it either to Orion or to the issuer by email. We will be more than glad to answer it. And once again, I'm just repeating that the placement process is running till next Friday, so 19th of December. So you still have time to familiarize, give questions, and make a decision whether to invest in these securities. With that, I want to thank you for your attention, and have a nice remaining of the day.
Thank you.